Well, I think there's so many issues, I think, with the Labour Party economic policies and plans. Firstly, there's an issue about whether or not they really could raise the tax revenue to finance even a substantial chunk, let alone all of the plans to spend money. And the IFS, who I think are the most independent and well-informed, independent analysis.
This is Paul Johnson, who's criticised the Tories as well.
Paul Johnson, the IFS, yes, absolutely. I mean, I think the IFS has more knowledge, more independence on this issue than anybody out there at the moment. And their view is that it is extremely unlikely that enough revenue could be raised from the taxes that the Labour Party have said that they will use, and certainly not plausible that they can raise enough revenue from those who, in the Labour manifesto, it's claimed are going to generate all the tax revenue, the rich, the top 5% or so. So I think there are some serious economic holes in the Labour Party proposals. Okay. That would be one reason why I would not sign the
balance, actually, I should just ask you, the Tory proposals don't get much better press from the likes of the IFS and others.
Quite so. And the IFS has been pretty clear that the Tory proposals are, for most government spending, if you exclude health, to actually be on a very flat trajectory. The IFS has talked about baking in austerity. So there are criticisms on both sides. I mean, I think the IFS is pretty straight down the line on this.
Yeah.
When you look at every election and the economic promises of politicians, I find it quite surprising how quickly the most left-leaning propositions gather a number of academic support and immediate signing of a letter confirming that is absolutely fine. We saw that in Greece with allegedly 200 academics saying that the Syriza plans were fantastic, the same with Podemos in Spain, etc. However, what I don't see, and what would be a lot more useful, would be academics actually saying what this means to productivity, what this means to ultimately to the savings of citizens, and more importantly, whether people signing to say these empty promises that are coming from one side and the other are simply not going to work. And that's what I get a little bit frustrated with.
Well, it's partly that the incentives of most academics are to produce, in economics, complicated mathematical models that get published in esoteric journals, and that's how they get promoted, and not to be really all over current contemporary economic events. So that's just the way the academic world works. I mean, I think there are academics out there who are looking at sort of fiscal type issues and election generated issues in the UK. We've got the Resolution Foundation. We've mentioned the IFS. The IFS certainly has links with many distinguished academics in the UK. But I think these kind of letters, as I say, there are enough academic economists out there in the world that getting 150, 160 people to sign anything is not that difficult.
It's true. I was in books the other day and I picked up a book. I thought, well, that looks interesting. Then I saw it was by Yanis Varoufakis, so I put it right back down again.
David, you've in the past, I think, said if we crash out without a deal, then you would be in favour of cutting interest rates at this point. Without a resolution to this Brexit story, we are already seeing some data weakening. Would you be keen to see a rate cut or some action by the Bank of England at this stage?
Well, I think it'll depend on the aftermath of the election and how that goes. And you could imagine various scenarios there. There could be a bounce in financial markets. There could be some increase in business confidence. Perhaps people will bring forward investment plans. I mean, that's one end of the spectrum. The other end is, it's a hung parliament. Nobody knows quite where we're going. We're back in a fog of uncertainty, and the economy weakens. So I think it's going to be very dependent. The right strategy for the MPC, pretty obviously, I think right now is, well, we're just going to have to wait and see how things pan out after the election, and what do things look like in January. Of course, the Bank of England, like many central banks, has got sort of fairly limited ammunition left in the locker right now. I mean, we start in a position historically of extraordinarily low interest rates in the UK. Bank of England is sitting on north of £400 billion of asset purchases. So it's not as if it's starting from a neutral position with plenty of scope to make policy more expansionary. I mean, it's pretty limited.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.